Your money should serve you and your goals, not the other way around. At Eastern Planning Incorporated, we want to ensure your dreams are within reach, and this starts with a smart financial plan. Welcome to It's Not Just Money, It's Life with Matt and Beth Blecker. In our ongoing podcasts, we will give you clear and trusted guidance, teaching you how to use your finances to make your retirement years the fulfillment of your dreams, with a well-balanced life free of worry and stress. We are so excited that you have joined us. So, let's get started.
Welcome, everybody. This is It's Not Just Money, It's Life. And I'm Beth Blecker, CEO of Eastern Planning. And if you listened to us before, you'll know that I'm not usually the one who starts this. Today, Matt and I are flying solo. So if we make any mistakes, I hope you don't get too upset about it. So It's Not Just Money, It's Life is a podcast that's based on my book by the same title. And in 1995, I started Eastern Planning with my, at the time, husband. But unfortunately, just a couple of years later, my husband and I separated, business and personal life, and off I went with Eastern Planning on my own. But then in 2001, I was very, very fortunate to have my son, Matt, join me, and he is an investment whiz and the most organized person I know and dedicated. So today we're going to talk about financial fitness, which also leads to financial organization. So now let's move on to financial fitness. As I told you, Matt is organized to a T, and he uses his organizational skills to manage both his fitness and his finances. I don't know of anyone who's as dedicated to going to the gym as he is. So what I want to do right now is say, Matt, how do you relate your exercise regimen to your investing regimen, and how can people be able to follow suit?
I think it's just really about setting out a plan, setting out goals, and staying disciplined. It's pretty much as simple as that. And once it becomes a way of life, it's pretty simple to do.
Yes, you say that because you're in the gym 6 days a week. Me, I have trouble going 1 day a week, even though I try my hardest. If I didn't set up to go with a trainer, I would probably never go. And I notice that one of the biggest problems people have is running away from their plans. They've invested for the long term. Something happens in life, and all of a sudden they're selling out, or they're buying things they shouldn't buy, and they don't stick to their plan. How can financial fitness relate to that?
Well, as financial advisors, we're really like a coach to our clients. So we have regular updates with them, or we're here like a concierge doctor would be anytime they need us. So if there's market volatility, we speak to them, we tell them to take a long-term perspective, think about their plan, and to ignore all the noise. And that helps a lot of our clients stay invested, stay disciplined. And on the other side, when there's a market rally, like there's in 2021, and there's a lot of irrational exuberance in certain categories, like meme stocks or certain tech stocks or cryptocurrencies, we're here to keep them away from that sort of thing and to keep them balanced on their long-term plan. And so I think for them, having a financial coach, for our clients, having a financial coach helps. And following it in our personal lives is easier to do when you're in the business yourself and you're dealing with it every day.
Exactly. So a lot of people, they think that they can buy the stocks because people are giving them good tips and they know that the market's going up and they buy what they want to buy. But unfortunately, getting to your goal is not just finding the right stocks and buying them. And that's part of the biggest problem in financial fitness. It's not jumping from one thing to another thing, or not knowing when to get out. And I know that that's one of the most important things that you do in our work with our clients. So basically, inside of the goals and objectives, how do you come about getting those goals for the clients? Because it's not just, here it is, this is the same for everybody. Here's a basic goal, everybody should follow that. So how do we get to put together a goal? Like, I know when I went to my trainer, the first thing he did was make sure of how fit I was and what I was capable of doing and what were the things that I needed to be capable of doing so that we had to get me to that point. How is that relating to being a financial plan?
Well, I guess just like a doctor would or a personal trainer, we don't make any recommendations first. The first meeting or two, usually a couple meetings, is getting to know the client, finding out about their goals, finding out about their risk tolerance, finding out about their investment history to determine if they've made any irrational decisions in the past. And then we create a plan that's best for them and that works for them after doing full analysis of their situation. And that's really what it's about. And that helps for us. So for a client that's nervous, they may be more conservative. They may only have 40% in equities and have more money at the bank and savings accounts. And for a client who doesn't need their money, who's more aggressive, maybe they have a play account where they can have some individual equities. They still would have the right diversification. They still would have a safe bucket for withdrawals. So it's really getting to know the person first and doing analysis of what they have in their whole situation before you make any recommendations.
And now I'm going to go back to, it's not just money, it's life. And I'm going to say that financial fitness is not just about your investing, because so many things in your life can offset the money. And so we have to be able to look at our entire life and make sure that we don't hit any roadblocks and that we don't have any problems that will cause us to deflate our whole plan. And so one of the things that we do at Eastern Planning is we work together. So Matt and I make great partners because he is just so financially fit and so able to do the investing. On the other hand, not quite me. I'm not the one who is going to tell you anything about your investments. However, again, it's not just money, it's life. And I work with your financial life. So what's an example of that? Well, it's looking at what in your life can cause a problem that will get you completely off goal. And there's a story that I have where I had a couple who were just about at retirement. They had wonderful pensions, a nice amount of savings, and they had paid off their mortgage and they were ready to retire. And so the big event came, they retired, and life was moving along just beautifully until their daughter wound up in a very, very, very bad divorce. And she had to move back home with her 2 children. Now, that may not have been a problem if it were just temporary, but the finances that her daughter were left with were terrible. And so they had to come up with an alternative of what was going to happen. So they decided that they were going to build an extension on their house for their daughter and her 2 children, and also have it available for her daughter to set up a daycare center, which is what they did. That wasn't part of their plan, not part of their plan at all. So you see how life can take over a plan and life can take over what you're about to do. So inside of that, we had to sit down with them and we had to figure out what are some of the things that we can do to make their life still work. And that was a big issue. So another time, another issue can be, does your children have the proper insurance? What happens if tragedy affects your children? What happens if your daughter is married to someone and he passes away and then there's no life insurance? What happens if your son is married to someone and she passes away and there's no life insurance? What are you going to do? Are you going to leave them alone or are you going to jump in to help them? So inside of making our plans, Matt, a lot of times we have to look at a lot of the alternatives and say the what ifs. And we have to look at how are we going to help them inside of those types of problems. Have you noticed any types of problems other than that we've had to deal with that is very, very important in looking at your financial organization and your financial fitness?
I mean, there are a number of problems that come up. The first is, and a lot of our clients who've been clients for a long time don't have this issue because they know our strategy and they've been through a lot of volatile markets with us. But the first is making sure somebody can stay disciplined and stick to the plan they have and not veer, of course, not get too aggressive or not panic sell. But then they also have to consider, like you said, other risk. And they could be something that may not, that's a very small likelihood of occurring, but a lot of times those risks are very cheap to insure against. So one of them would be an accident, for example. And a lot of our clients we see don't have adequate umbrella insurance. They maybe have $1 million, but they have a lot of, in certain states, retirement accounts are creditor protected, particularly 401ks, and a lot of states IRAs. But non-retirement assets are typically not creditor protected. So we always make sure our clients have the right amount of umbrella insurance. So we have them go back to their P&C agent and add that amount. And a lot of times it's like throwing pennies under a steamroller. You can add several $1 million of umbrella insurance for only a few $100s more a year. So that's certainly one risk in addition to the life insurance factor. And the other risk would, for an older person, would be long-term care. The cost of elder care is increasing at an exponential pace because a lot of people are living longer and needing more care. And certainly it's going to probably get worse because the boomers are a very big generation. So we look to see if they have adequate long-term care. A lot of times they do, but because it's getting more expensive, it's challenging today. So sometimes there are other ways they can do it, or sometimes when you don't have it or it's too expensive, it's a risk you have to take, and you can try to do some other things. So insurance is a big deal for us to look at. We aren't really insurance salespeople. So if we're recommending life insurance, a younger person is typically term insurance. We're very into buying term invested difference, getting the cheapest insurance possible, but obviously from a reputable company. But for an older person, it's typically not life insurance because they have enough assets. It's typically other risk like protecting their assets by buying an umbrella policy or by making sure they have adequate long-term care in case they need elder care, custodial care later on in life.
Right. And then you said for the older person, the long-term care, but then for our working clients, especially when they're at a moment in time where they're making the most money they've ever made, we have to look at disability insurance. And a lot of companies offer disability insurance, but did they get enough? And is the company paying for it? Because if the company's paying for it, then when you get it, that money is taxable. But if you're paying for it, when you get it, the money is tax-free. So you need a less amount. So again, another risk can be you're working, you're doing great, your career is moving along perfectly, and something happens where you're no longer able to work in that career. Now what do you do? And again, insurance is an answer. And one of the places to look is through your company's benefits, because they might have the appropriate benefits. But unless you actually looked and saw what they're offering and what you have, you may not have taken the right amounts. So it's very important that you have a coach that looks and puts that picture together and says, what if? What if? And we hate looking at the what ifs because nobody wants to admit that those what ifs can happen. But we have to be prepared for those what ifs. Is there any other types of insurances for our clients that they need to just look at to make sure that they've had?
Well, I just say on disability for a second, because a lot of times a private disability policy is very expensive. So that's why it's imperative to look through your employer. Sometimes I think even if it's not portable, it's worth it just to make sure you have the adequate coverage through your employer rather than getting a private policy, because a private policy can be very expensive. But sometimes for a small business owner, for example, a private policy, it could be better. So it depends on the situation, but because disability insurance is very expensive, if you work for a larger employer, you want to make sure you take advantage of the best disability policy they have. A lot of times that's paying a little bit of an extra amount. And then I'll just expand on something Beth said about you want to make sure it's other than you'd rather you get paid from your compensation rather than the company paid. So it's tax free if you would get it. You also want to distinguish between own versus any. Some disability policies like Social Security disabilities works this way, where they'll only pay you if you can't do any occupation, whereas you really want a policy that pays if you can't do your own occupation. We've had certain clients go through this sort of thing. So that's definitely a risk to look at if you're still working and you're still in your peak earning years. And one more I'll expand on is paying for college. Obviously, college is very expensive. Some kids today need to go to college, some don't. Some may go to a state school, it's less expensive. Some may go to a trade school. But even if you go to a less expensive school, it's still rather expensive. So one thing that's important for young parents to do, and that you can do as a grandparent if you have extra money, is you can either open a 529 directly, or you can gift money to your kids to open a 529. A lot, and the younger you start, the better. And what's good about a 529 is it can be used for prior to college, it can be used after college for qualified education expenses. And if one child doesn't use the whole amount, it can go to another child or another beneficiary. So they're very flexible plans. And that's something that you should get started with or look into as soon as a child is born. And a lot of times we use the state plan of the owner. So if the grandparent owns it, we'll look at their state. If a parent owns it, we'll look at the state they live in. Most states now, even New Jersey, have an income tax deduction for contributions, not at the federal level, but at the state level. And then, of course, money comes out for qualified education expenses tax-free. And we usually use these state plans. Vanguard runs a lot of them. So we just help because our clients already pay a statutory management fee for retirement accounts and other investments. We usually just use, for example, in New York, the Vanguard plan, the state website, which is a cheap plan. And we can use some customized options, some age-based options, depending on the situation. But that's another risk to look at. Do you have your future big expenses covered, whether that's college expenses, future education expenses, could be a Sweet 16, could be a bar bat mitzvah. So that's something you want to plan for as well and make sure that it's covered. And not only if you're a parent, but also if you're a grandparent. If you don't, we have a lot of clients who don't need all their minimum distributions because they have pension income, Social Security income. So if you don't need all that money, you may be able to gift your kids and grandkids money to help them out or to get them started on a savings plan for expenses that may come due in 10 or 15 years.
Okay. So now we looked at a lot of insurance, but now I'm going to move to another area, which is legal documents. And a lot of people put off doing their legal documents. And a lot of times they put it off because it's sort of like, if I don't think about it, it won't happen. And a lot of times I look at clients who have older children, adult children, and their legal documents still have guardians for their children who are 5 and 7. And so a lot of times you do your legal documents, you put them away, forget about them, and don't look to see if you've named the same people. Somebody didn't die and they're one of the people you've named. So it's very, very important to make sure you have up-to-date legal documents. Very important for you, your spouse, and very important for your children. Otherwise, they are going to have a very hard time. However, one of the things I'm going to tell you as a grandparent and already having gone through adult children parents is it's also important. We don't, as parents of children who are turning into adults, we don't like to, step on their toes. However, when you have an 18-year-old going off to college, if you have not gotten them a healthcare proxy, and hopefully they made you and or your spouse the healthcare proxy or the healthcare power of attorney, and something happens to them and they end up in the hospital, you will not be called because they are an adult. So it's very important that once that child turns 18, you get them a healthcare proxy. A lot of people think of that living will, and they think of it as, how am I going to die? Right? Oh my God, I'm not going to die. I don't want anybody to pull the plug. But that's not really what a healthcare proxy is. A healthcare proxy is somebody being at the hospital with you. somebody being able to help you make decisions. And if you're not able to make decisions, to help make those good decisions. Like, I had a client whose daughter in their early 20s ended up in an accident, ended up unconscious, ended up with a big gash on her face. The mother was called. The mother found out that she had a big gash on her face and made sure there was a cosmetic surgeon available to repair the gash on her face. That's not a matter of life and death, but that's an important decision. So a lot of times inside of your financial fitness, you do have to worry about your young adults, and you do have to step in and make sure you're there to help them. And again, you need to step in because we've recently, unfortunately, Matt, you and I have recently had to deal with a client whose daughter committed suicide and left 2 children without an appropriate will. And the parents had to go through hoops and legal expenses. And it was such a tragedy. So sometimes we have to step in and make sure our young adults and young families have done adequate legal documents. And that was pretty hard, right, Matt? What we had to do with working with that family and the young grandchildren.
Well, there are also custody issues there. Yeah, but that was a challenging situation. Thankfully, there should have some life insurance, and there are some assets for the kids, but there's a trustee looking after the assets. We obviously had to work with an attorney to get a letter of testamentary, and the trustee had to go to court to confirm that they were the guardian of both kids, because there are some questions on that. But even though there were a lot of things set up correctly, it still took a while to get things settled. And now, thankfully, in a tragic situation, the kids have at least something to fall back on to help with their education and other things.
Exactly. So I'm going to take a couple of moments now because we just threw so much stuff at you. And a lot of times we actually do individual podcasts about the individual topics. But inside of this episode, we just threw it all at you, just threw it at you, and we hope some of it sticks. And if it doesn't stick and you have any questions, please feel free to go to our website. We have a lot of information on our website. You can actually just look at and get the information from the website. Or, of course, you can email Matt at mblecker@easternplanning.com or me at bblecker@easternplanning.com. But let's just look back and see, because we did a lot of conversations first about your investing. And Matt talked about how you have to have a goal and you can't jump around and you have to be organized, right? So we looked at investing, and then we looked at insurances, and we talked about life insurance. And when you're older, sometimes the big issue is you have too much life insurance. You don't need it. Why pay for more life insurance? But when you're younger, you may not have enough life insurance. It's very expensive to raise those children, a lot more expensive if you sit down and you analyze. Let's look back 22 years and see how much that child cost us. Or when there was 2 parents working and now there's only 1 parent, and that 1 parent can't work as much because they have to be available for the children. So being younger and replacing the income is very, very crucial. And as I said, as a grandparent, sometimes you need to step in, because not that you're being selfish, but you don't want your retirement to go astray because you need to step in and help your child, which every grandparent I know is very willing to do that. So there's the life insurance side. And then, of course, as you get older, there's the long-term care side. And do you need long-term care insurance, or are you self-insuring? And you need to make sure you look at that. And we spoke about the disability side when you're still working and in the prime and something happens. You need to worry about the disability side. And then, of course, we had to look at, did I forget an insurance, Matt, when I just spoke now?
Well, we have life, disability, long-term care, umbrella. Those
Umbrella,
four.
right. And excess liability insurance is what umbrella insurance is. So umbrella insurance is less expensive. And what you do is, the reason they call it umbrella is it sits on top of your regular auto and homeowners. So it's an umbrella, so that if you have auto insurance and it's going to pay 100,000, 300,000 for an automobile accident, and you get sued for 2 million and you lose the lawsuit, they can go after some of your assets. But if you have an umbrella or an excess insurance policy, then excess liability insurance policy, then the insurance company pays, not you. So it's very, very important. And then we went on to our legal documents. And looking at our legal documents, one of the biggest issues is not just you, but your children. So you want to have a will, and a will goes through probate. So if you don't want to go through probate, and that's a conversation that you need to have, you might want to have a revocable living trust, a will and or a revocable living trust. But that's not the end. Then you need to have a living will and a healthcare proxy. And included in that, that's where the power is. There's also something that's not power, just information, and that's called a HIPAA form. So the healthcare proxy gets to make the decisions, and the people listed on the HIPAA form get to find out the information. And finally, you need a financial, durable power of attorney. And you need to be very careful about that, because a lot of places are very temperamental, and they either want their own document or they want a document that is currently done. They want a document that it isn't too long ago. It's within the last 2 years. So you want to make sure that you have a current power of attorney and or the power of attorney that the bank accepts. And then you want to make sure your 18-year-old has a healthcare proxy. Maybe not so much a power of attorney, because you probably pay all their bills, but definitely a healthcare proxy. You don't want their roommate calling you up and telling you that your child is in the hospital. You want to be able to get firsthand knowledge. So I think really, to have a financially organized life, to have financial fitness, those are the basics. Is there anything else I didn't discuss, Matt? Is there anything else we could add on to have a financially fit life?
I'm sure there's some things we could think about, but I mean, the last thing we could touch on, which we haven't, is tax planning, is maybe minimizing future taxes, which is something people don't think about. People think, and then now I can minimize my taxes now. But a lot of times, let's say we have a client who's 62 years old and they have a lot of pre-tax retirement money. They may have, let's say, $1 million in an IRA. In 10 years, let's say those assets will likely grow some more, and then they'll have to take minimum distributions and pay ordinary income tax on those minimum distributions. And you don't have much flexibility on that once you reach your required beginning date. And whatever the tax rate is then is something you'll have to pay. It could be higher, especially with all the debt we've undertaken. It certainly could go up rather than go down.
So as I said, there's so much to be financially fit. So I wanted everybody to just get this big blast of information. And remember, if you need us, we're here. You can email us, mblecker at Eastern Planning, bblecker at Eastern Planning. Go to our website, easternplanning.com, or give us a call, 845-627-8300. And hopefully we'll hear from you. If you have any questions, and we look forward to reaching out to you in the near future. Thank you very much for listening.
Thank you for listening to the It's Not Just Money, It's Life podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Eastern Planning Incorporated. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities and advisory services offered through Royal Alliance Associates, Incorporated, RAA, member FINRA, SIPC. RAA is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of RAA.